Bitcoin finally getting a move here. What I think is amazing is that if you watched last week's game plan on Thursday, I told you guys that your bias in the short term on Bitcoin became bullish. And again, I mean, the little tidbits that I'm dropping in these game plans can literally make you guys money. Now let's talk about it. So basically what we had here, we have this trend line, right? So we have this trend line sloping up. We had this orange one sloping down. Now, one of the things that I was pointing to, and I'm going to zoom in on this because it's super, super important, is that if we take a look here, we know we had this trend line here, this trend line get hit here, here, and then also multiple times here and once here, and then we broke out. This was last Thursday, right? Thursday we broke out. That changed the bias. From that point, it now became a bullish short-term indicator. Now remember, short-term tells you nothing about mid-term or long-term. It's only telling you about what's going to happen in the next few days to week or so. But sure enough, we closed here. We consolidated on Friday and Saturday. Sunday, we ripped higher. Monday, we're continuing up. Now, again, couple levels to watch on Bitcoin because, again, to me, Bitcoin's going up here. I have positions with verified investing crypto members in altcoins like Cardano, which is showing us a breakout as well, and other altcoins. But the key here, again, is at some point, resistance is going to get this in check. Now, there's a couple levels I want you guys following on Bitcoin. So where is your next Bitcoin resistance? Let's take a look right here. Okay, so if we look at Bitcoin, one of the things that I'm seeing is there's a lot of resistance at a former level right up here. So you're looking at anywhere between, I would say, 28,800 and 29,000. Now, again, look at how price hammered on this level over and over again before breaking down. What that tells us is whether or not this was at some point support. You know, why it was, we don't necessarily know, but this type of action created support. What that means is if price rallies up into this, this is going to be now resistance to the opposing side. So that is going to be resistance anywhere, again, 28,800 to 29,000. Now, should Bitcoin break above this level, let's say it puts in bullish consolidation and breaks up, you have a very clear upsloping channel or trend line that takes you back to between $30,000 and $31,000. So those are your upside levels. Now, do I think that all of a sudden Bitcoin's in a new bull market and going to be moving up beautifully? No, I don't necessarily think that. What I do think overall, if we zoom out on the chart, is that this is a common move where we see a move from this low to this low to this low. We then broke through it. Now you're retracing to the scene of the crime, back to test home base. That's a very common thing in technical analysis. All right, now again, what you're going to come into is that same resistance up here if we test it, and then ultimately if we confirmed above it, then you'd have a breakout. But one thing I always tell my traders, never assume a breakout is going to come until it shows itself, right? So many people assume, they get on the wrong side of the trade and they get whipped out. Don't get whipped out. Okay, so that's what we're looking at there, guys. Again, I would just say this is my short-term bias remains neutral to positive, although the upside has now come in quite a bit. My midterm remains still bearish, and obviously, if you ask me where Bitcoin is in 5 years, I think it's much, much, much higher.
Bitcoin and Ethereum's prices surged nearly 4%, triggered by the U.S. government avoiding a shutdown. This spike led to $70 million in short positions being liquidated. The U.S. government's stability brought relief to crypto investors, signaling positive prospects for the Bitcoin spot ETF. This, coupled with October's historical bullish trend called Uptober, bodes well for market sentiment. Bitcoin's price rallied past $28,000, consolidating near this level. It could face minor corrections but remains bullish, supported by a strong uptrend line. The U.S. government avoided a shutdown, maintaining economic stability. Congress passed a stopgap bill, with Democrats in unity averting the fourth federal shutdown in a decade. Treasury Secretary Janet Yellen warned against a shutdown's reckless economic consequences, including reduced trust, expenditure, and investment, potentially harming economic growth. Let's continue our discussion with Gareth.
Markets today, in the overnight, we saw the futures jump. We saw the futures jumping because the U.S. government didn't shut down, and then they faded because the dollar strengthened and yield strengthened. Now, in all fairness, the shutdown of the U.S. government, we've had it happen, and it never has really materialized into anything big. so I didn't really expect it to have much staying power. But again, initially you got that light volume on the futures to jump to the upside. Again, it since has faded and markets are slightly lower. Now, the beauty of this is that the 10-year yield continues to be into the resistance that I've talked about. Now, when I say resistance, what are we talking about? Well, clearly I've shown you guys this before, but we have all these trend lines being hit over and over by price, right? So essentially we're right into that level. So we know that this is resistance. Now, on a technical basis, this is a probability trade, meaning that if you look at every past move, you're getting these reductions in yields off of this level. So what you do is you use logic and you say, okay, by that method, it means that there's a probability, a higher probability than not, that I see a pullback on yields here. Now, this is the kicker, guys. One of the things we have to do is we want to zoom in. This is the weekly chart of the 10-year yield. What we want to do is now go to the daily chart. And when we do the daily chart, what we can see here, and I'm zooming in a lot because I want us to focus on this area right here. And then when we do that, what do we see? This is what's called a topping tail. And a topping tail is a reversal signal in technical analysis. It forms when you get a long tail to the upside and you get a close in the lower 25% of the entire height to bottom, top to bottom of the candle. Now, the key is this. We always want to look for how something would fail. Like, for instance, this trend line, is it possible that we could go higher in yields? And the answer is yes, it is. So how do we know this? How do we analyze this? Because again, remember, even great probabilities, a 70% chance to win on a trade or an 80% chance to win on a trade still means there's a 30 or 20% chance that it won't play out. So what we do is we watch this, and this is today's yield. Yields are moving up a little bit here. We closed down here on Friday. We're up just a little bit. And what we want to do is we want to look at the very high of the topping tail candle. If you get a daily close above that topping tail, that negates the topping tail in its entirety, meaning that this bearish reversal candle is no longer in play. So what we're doing here is we're watching very closely this level, which is around 4.7% on the 10-year yield. Should we close above that today or tomorrow or later this week, that would then negate that bearish signal. Okay, and then we'd have to start talking about, all right, where could yields potentially go? And if we look at our daily chart, let's go back to our daily chart, and we zoom out significantly. In fact, we have to go back to the weekly chart. We then start talking about this next trend line here. So if we do negate this trend line, negate the topping tail, and we can clearly see again that probabilities do tell us it's going down, we need to start looking at this level around 5.25% to 5.3% on the 10-year. Now, again, I'm a betting man, right? It's all about being smart. It's all about understanding probabilities. I'm still in the camp, and so far I am correct, that yields have topped here between 4.6 and 4.7%.
With Bitcoin's recent surge to around $28,000, many wonder how high it can go in the next bull run. Before pinpointing price targets, let's consider when the next Bitcoin bull run might start. Factors like adoption, institutional interest, regulation, macroeconomics, and technological advancements play pivotal roles. The upcoming Bitcoin halving, expected in late Q1 or early Q2 of 2024, historically precedes a bull run. Institutional players, including hedge funds and corporations, show growing interest in Bitcoin. Their involvement could boost demand and prices, especially if the SEC approves a spot Bitcoin ETF. The SEC's recent delay in deciding on ETF applications from BlackRock and others leaves room for anticipation. Some noteworthy BTC price predictions for the next bull run: Pantera Capital, $148,000. Adam Back, $100,000 before March 2024. Robert Kiyosaki, $120,000 in 2024. Standard Chartered, $100,000 by 2024. These forecasts highlight the influence of institutional adoption and regulatory developments on Bitcoin's future. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.